What is a comparable sale in property assessment? Have you ever wondered how property taxes are determined? One key method used in property assessment is the comparable sales approach. So, what exactly is a comparable sale? A comparable sale, often referred to as a comp, is a property that has recently sold and shares important characteristics with the property being assessed. These characteristics usually include location, size, age, condition, and features like the number of bedrooms and bathrooms. Special amenities, such as renovations or pools, also play a role. Tax assessors utilize comparable sales to estimate the fair market value of a property. This estimated value directly impacts the property tax assessment. The comparable sales approach involves identifying several properties that are similar to the one being assessed and have sold recently in the same or nearby neighborhood. Since no two properties are identical, assessors make adjustments to the sale prices of these comparable properties to account for differences. For instance, if a comparable home has more square footage or a newly remodeled kitchen that the assessed property lacks, the assessor will adjust the comparable sale price downward. On the other hand, if the assessed property has features not present in the comparable, the value is adjusted upward. These adjustments are essential for arriving at a fair estimate of the subject property's market value. The underlying principle is that an informed buyer would not pay more for a property than what similar properties have sold for in the open market. By analyzing multiple comparable sales and making necessary adjustments, assessors can estimate a market value that reflects current market conditions. When it comes to property taxes, the use of comparable sales is fundamental. The assessed value derived from these comparisons forms the basis for calculating property tax bills. Selecting accurate comparable sales is vital to ensure fair assessments and avoid overvaluation, which could lead to higher tax burdens. Tax appraisal districts often use automated mass appraisal models that incorporate recent sales data and apply adjustments systematically across many properties. This helps maintain consistency and fairness in assessments. In practice, comparable sales must be recent to reflected current market trends. They should be as similar as possible in terms of location and property features. Differences in school districts, neighborhood amenities, and zoning can also influence which sales qualify as valid comps. The closer the match, the more reliable the comparable sale is for assessment purposes. In summary, a comparable sale in property assessment is a key tool that helps tax assessors determine a property's market value. By referencing the prices paid for similar properties nearby and adjusting for any differences, assessors ensure property taxes are based on fair and current market values.